Okay, so we're recording now. I mentioned that this is an optional class and that I was going to be here to answer questions. I did give you out kind of a cut of some practice questions from what the book suggests would be a good study guide. If you weren't here in the last class, I have that handout if anybody wants it. Like I said, I don't have anything prepared, but I'm here to answer questions. So you guys ask questions, homework, whatever, notes, and I will be here to help. We have lots of practice questions out there, lots of practice tests. All of the handouts for each chapter. So go ahead and fire away from anywhere. I'm going to go ahead and share my screen in a second. Go ahead, Josh. Yes. Hello. You have the study guides that are here, and then beneath the study guides are the solutions. Now, you guys should be able to see those, but if not, let me know. And again, these are provided by the text provider. Nobody has any questions. Let's not waste the time here. Let's you guys try number one, and we'll work our way through some of these. Yes, should be. Let me check. Nope. I'm sorry, it's not. Good question. Sorry about that. It is out there now in the electronic version. Bless you. Okay, so if we're looking at number one, it has the following balances. And what it wants to know is how much are the liabilities. So we have to say assets equal liabilities plus equity. So here we have our assets, 5,000, 25, 75. I know I missed a zero there, sorry. And 14,000. So we can sum these up. And we have our equity, 700, 1,900. And so we have 2,000 or 21,575 and 2,600. So our liabilities, we take the assets, we subtract the equity, and we get 18,975. Okay, let's try number three. You guys should be trying it. Make sure you're reading it. Don't wait for me to put up the answer. You got to work, just like practice. Okay. Number three says, Shell Company's year five balance sheet has the following balances: stockholders' equity of 4,600, liabilities of 3,800. During the next year, assets increased by 300 and liabilities decreased by 150. What was the change in stockholders' equity? So if we're just looking at changes here, our assets go up 300, our liabilities go down 150, not 750, sorry about that. And so we would expect our equity to go up 450 because that has to equal out to 300. Now, again, keep in mind here, I'm focusing on the quantitative questions. Your test is going to be roughly half, maybe a little bit more of concept questions. So the reading is important, okay? Sure. Absolutely. Sure. Do you have a specific one in chapter 3? Because I was going to move to chapter 2. So that would be, okay. Okay, so no, it's okay. I'll go to chapter 3. Okay, take 30 seconds to read it. Start with number 1. Yes. Yeah, they wanted to know the change in that one. How much did they change? And it increased 450. Okay, so the first part asks us to compute accrued revenue. And so the company worked 150 hours. By the end of the year. And so that's not been accounted for on the books yet, and so we have to accrue it. So we have the 150, and then the rate is $50 per hour. So we take the 50 and then we multiply them. 150 hours at $50 per hour is 7,500. So this is the amount to accrue. B asks us to journalize the entry to record the asset. And so here we're going to have a debit to accounts receivable or unbilled revenue. And that's a debit, right? For 7,500. And a credit to fees earned for 7,500. Okay, take a look at number 2. By the way, if you have questions or I'm moving a little too fast, just give me a wave and I'm happy to slow down. So it says a company pays its employees every other Friday with daily wages of $340, including weekends. Previous payday occurred on Friday, June 24th. And so now we have, if the company's year ended June 30th, what amount should wages payable account on the balance sheet show? All right. So we have to calculate wages payable. And so we have $340 per day. And that includes the weekend. So we're going to count Saturday and Sunday. And so they have 6 days to accrue. And so we take the 340 and multiply it by 6. And we end up with 2,040. Correct. 30 minus 24, 6 days. Journalize the entry. And so we're going to have a debit to wages expense for 2,040 and a credit to wages payable for 2,040. There are some. They are not the main focus, but there are some. So my memory serves, they're all multiple choice. So it would ask you, what does the journal entry look like? And it'll have examples of the journal entry. The test is on Cengage. It's all multiple choice except for one, and the other one is like a fill in the blank. And you're putting dollar amounts in the appropriate categories. Okay, so number 3 says a rental company owns a building from which it leases out multiple offices. During the year, it received the following advanced rental payments for 1-year leases from separate tenants. So we have 24,000 in June, 36,000 in August, and 12,000 in October. It says the leases started the first of the month following the payment. Assume that these are only advanced rental payments and that no adjusting entries were made during the year. Find the balance of the unearned rent revenue account at year-end December 31st. Also find the amount of the adjustment needed at the year-end. So if no adjusting entries were made, then the balance in unearned rent revenue would be the total of those accounts. So 72,000. Now, how much did the company earn? So for June, it would have started in the month following, so they had 6 months here. In August, so it starts in September. So we have September, October, November, and December. So we have 4 months. And then in October, you have November and December. So that's 2 months. Remember, there are 12 months in a year. And so if we want to find how much did the company earn, we take the 24,000 and then we multiply it by the 6 and then divide by 12. The other one we do that by the 4. And the last one we do by 2. And then we want to sum those totals. And we end up with 26,000 is what we earned. Okay, so the journal entry is going to be a debit to where they use unearned rent revenue. For 26,000. And a credit to rent revenue for 26,000. Yes. Right. Correct. Sorry, I didn't go to that last step. So if 26,000 is earned, so we have 72,000. We subtract 26,000, and so 46,000 is the balance at end of period.
First part B one more time. Is on how. Yeah, when we talk about the 6 months, finding the 26,000.
Okay, so it says the leases started the first month of the following payment. So here, our lease starts July, September, and November. So this is the number of months earned, right? So you have July, August, September, October, November, December, 6 months. September is included, so September, October, November, December, and 2 months, November and December. And so we've earned, remember, these are 12-month payments. So we're splitting them up into 12. And so we're basically multiplying it by 6 over 12. And so we get to 12,000, which is half, right? We would expect to earn half if it's a 1-year contract. Correct. That's all it is how much per month totaled up for these number of months. Okay. And when they made the entries, they would have made a debit to cash for the amount received. So let's say the first one, 24,000. And then they'd have a credit to unearned rent revenue for 24,000. And so what we're doing is we're utilizing some of that. So we're eliminating the liability because we earned some of it. And now each one of those would have to be added in, right? So they'd have the 24,000, then they'd have the 36,000, and then they'd have the 12,000. So ultimately, you'd end up with 72,000 here and 72,000 here. And so we have to back that out, and that's how we got the 46,000. That's okay. All right. Let's take a look at number 4. This is the other side of it. So this is prepaid rent. So you guys should give this one a try. And realize now that we're coming from the other side. I just want you to determine the amount of the adjustment. Part A. I'll give you guys about 2 to 3 minutes. If you have questions, just give me a wave and I'll come over. I think you have this copy. And we just went to number 4. Okay, I'll give you another minute before I start on the first part. Okay, so the original entry, which is not required, would have been a debit to prepaid rent and a credit to cash, right? For, was it 24,000? Yes. And so they're asking, how much of an adjustment, determine the amount of the adjustment that should be made on December 31st. So we have 24,000 and we started or incurring rent on June 1. So that's 7 months of rent. So we take 24,000. We're going to divide by 12 because it's a 12-month contract. So I think that's going to come out to 2,000. So that's 2,000 rent expense incurred per month. So you take 7 months times 2,000 per month. You have to make a $14,000 adjustment. So part B says record the journal entry. And so now you're going to be able to earn some of that expense some of that prepaid rent. And you're also going to lose some of your asset. So it's going to be a debit to rent expense for 14,000 and a credit to prepaid rent for 14,000. And so that leaves a balance of, you take the 24,000 that we started with, you subtract out the 14,000, and so it's 10,000. I don't know if that was asked for or not. I do want to do number 5, even though I've done the other 4, because number 5 is just a slightly different process, and I just want to remind you of it before we get there, because this functions more like an inventory or supplies account. So try to calculate part A. Okay, so you're gonna use the formula for most inventory or asset account. Your beginning balance plus purchases less your ending balance equals how much was used. And so our beginning balance was 2,670. We add the $500 worth of purchases. And they told us the ending balance is 1,220. So we want to find our used. We add the 2,670 to the 500 and then subtract out 1,220. And so our used is 1950. And for the record, I have no idea what that year was like. It's not very nice of you to think that I'm old. That's me. You laugh, baby. You guys need it. Got a test coming up. You're all nervous. All right. So journal entry. What are we reducing and what are we increasing? We're increasing our expense, right? Because we had some supplies. So supplies expense. 1950. And then we're going to reduce our supplies by 1950. Okay. Yes, it's understood. It's already recorded. That's correct. That's correct. Thank you, Haley, for reminding me to put that in. I don't think about it sometimes when I separate them out like this because this should be debit, credit. But always a good idea to throw as much in here as I can so when you come back and look at it, if you do, it's available. Okay. So I don't want to skip over chapter 2 without giving you a minute to look at it. Take at least a minute to look at chapter 2 and see if you'd rather have me go to chapter 4 or if you have any questions on chapter 2. Yeah, of course. Okay, are there any on chapter 2 you'd like me to do? Or can I jump to chapter 4? All right. Show of hands. How many say go on in chapter 4? Okay, good. We'll go on in chapter 4. I appreciate you having an opinion. And I want you guys to try this one. I'm going to give you guys about 2 minutes to do it. And again, this is no different than doing it from a list, except for it's a little more problematic because it's in paragraph form and you've got to read it. So do whatever you need to do in there, circle it, highlight it, to make sure you've accounted for everything that you think you're supposed to account for. Right, and in a minute, I'm going to come around and I want to see what you got. I know that'll cause you to have to write frantically, some of you now, but I don't mind doing it. Step from being an accountant to evil is not very far. You don't have to turn it. Looks good. Looks good. Looks good. Oh. Did you put? Oh, here. Okay. All right. No, you're fine. What do we get? Oh, you guys gotta try. You guys gotta try these. The only way to get there is to practice. You don't have to turn it upside down. I can read upside down. Yep. Okay, so remember, whenever they're looking for net income, that is just equals revenues less expenses. So here we have revenues, and our revenues were 82,000, right? Earned fees is what they called them. And then we have less expenses. And so I'm just going to abbreviate salaries expense, 40,000. Interest expense, 1,200. Supplies expense, 2,300. Insurance expense, 10,000. Advertising expense, 2,500. And depreciation expense of 3,750. We total up our expenses, and then we subtract them from our total revenues, and we get 22,250. I think I saw one of you had 22,300. Obviously, that's just a calculator issue, but for the most part, you guys did a very good job on that one. All right. Let's take a look at number 2. By the way, I don't have the answers up here, so I'm just doing them and coming up with the answers as I go. So when I come around to check, what I'm looking for is the form. Are you putting it in the right form more so than the dollar answer? Okay, so how do we start this one? And we can kind of go back to this kind of formula. Beginning balance plus less gives us a number. And so with retained earnings, we use the beginning balance. In this case, it was 0. We add net income. And so they said they have net income of 2,300. We would deduct a net loss. So there was none here. And we would also deduct any dividends, excuse me. And so here it says that they paid $750, and that'll equal the ending balance in retained earnings. And so here, 0 plus the 2,300 plus the 750 gives us 1,550. Now keep in mind, if they asked for stockholders' equity, which they did not ask for, way that would work is the beginning balance of common stock would have been 0. You add to it issuances of common stock. And so we issued $10,000. We would subtract retirement of common stock. And that would equal the ending balance, common stock. And so here we would have $10,000. So stockholders' equity would be both of those amounts. Now, that wasn't asked for, but if they do that, you have to recognize in this question that common stock is part of equity, but it is not part of retained earnings. Okay, somebody had a question in chapter 5, so I'm gonna go down to chapter 5 to make sure we get to that one. And then hope it isn't too hard, so I have to look up the answer. It's number 4. Okay, so it says Tools and More orders $40,000 of goods on account from Hammer Supply. Hammer Supply accepts the order by sending an invoice with the terms 210 net 30. So they have a 2% discount if they pay in cash within 10 days. If not, the full payment is due in 30 days. Tools and More is considering taking the discount, but would have to borrow funds to pay with the discount. The bank is charging a 5% annual interest rate. Assume a 360-day year. What are the savings for Tools and More if it takes advantage of the discount? Round answers to the nearest whole dollar. So we have 40,000 is our purchase amount. We have a 2% discount. And so if we take advantage of it, the discount would be $800. Now I do want to pull up the solutions because I want to see if they factor in the 5% charge. I don't think so. Okay. So they do want us to calculate. Oh, this is Tools and More, right? Period from exercise 10. Okay. Yeah, it's not number 4 on this because I just pulled them out of there. So it does want us to calculate the interest on what we're going to pay. And so the way that they calculate this is how much you're going to have to borrow times the 5% times the number of days. Okay, so let's go ahead and calculate that amount. Okay, so they net borrowing would be 40,000 minus the 800. You have a 5% rate. And what we have to do is multiply that by 20 divided by 360, because this is 20 days. And so that gives us 109. And so the net savings, sorry, is the 800 minus the 108 or 691. Because it's only, they're borrowing it for 20 days more than they would. So normally they would pay it off in 30 days, but they're going to borrow that money from 10 days. The assumption here is that they'll have the money to pay it in the 30 days, but they have to borrow the money to pay it early. Okay. So that was part A. I'm sorry? Yes. Yep, 800, because this is what your discount would be, 2%. So the discount is 800, but you'd have to pay $108 of interest on it. It is not, it just happens to be equal to that. The 20 days is the amount that they assume that they would have to pay that interest because they borrowed money. Whereas they would have paid it off in 30 days, but they have to borrow that money on the 10th day. And so they have to pay interest until the 30th day when they would have the money to pay it off, theoretically. Okay, and we made this kind of calculation before. What is the savings? And so the company has a 2% discount, and they save $20 days. And so we have 2% multiplied by 20 days divided by 360, which is the total year. And this is where I said sometimes you'll see 360 and sometimes you'll see 365 used. 360 is just used because it's easy calculations. Yeah. Did that wrong, I'm sorry. 360 days divided by 20. doing something right. And then you get the 2%. And so you end up with 36%. They did do well, it says if they didn't do the discount, then essentially they're foregoing 2% that discount over the last 20 days. Okay. So let's do 5 because it's related. And it says, assume that Tools and More pays Hammer during the discount period on the purchase in exercise 4. Show the journal entry to record the receipt of the invoice on August 2nd and payment for the goods on August 7th. So what are we buying here? It says goods. So I'm going to debit inventory for $39,200. That's net of the discount. I'm going to credit accounts payable for $39,200. And then on the 7th, I'm going to debit accounts payable for $39,200. And I'm going to credit cash for $39,200. Six looks like I got a little bit crazy with the copying, so that shouldn't be on your copy.